In a rapidly shifting landscape for cryptocurrency, recent announcements from the Trump administration have stirred both excitement and uncertainty among investors and industry leaders. With Bitcoin and other digital currencies poised for significant changes, the crypto world is bracing itself for what some are calling a huge U.S. price earthquake. This sentiment echoes across various reports as market participants assess the implications of new policies and regulations being shaped in Washington. The heart of the matter lies in President Trump's establishment of a crypto advisory council, a move that has sparked intense competition among industry titans eager to secure a seat at the table. This council is expected to play a pivotal role in determining the regulatory framework for digital assets over the next 4 years. A period marked by a push for clarity that many in the crypto community have long sought. "Everyone and their mother is begging to be on this council," remarked a source familiar with the situation, highlighting the high stakes involved. Notable figures such as Kraken's former general counsel Marco Santori and Ripple founder Brad Garlinghouse are among those rumored to be vying for positions. As the crypto sector anticipates a more favorable regulatory environment, the recent volatility in cryptocurrency prices cannot be overlooked. Following Trump's announcement of potential large tariffs on goods from Canada, Mexico, and China, Bitcoin's value witnessed a significant drop, plummeting from approximately $105,000 to around $92,000 before staging a recovery. This fluctuation illustrates the sensitive nature of cryptocurrencies to broader economic indicators and political developments. The flip side of gaining respectability is exposure to liquidity constraints, noted Nick Carter, a partner at Castle Island Ventures. Underscoring the dual nature of Bitcoin's ascent into mainstream finance. Adding another layer of complexity, Trump's proposed tariffs have not only affected Bitcoin but also sent shockwaves through the entire crypto market, leading to significant declines in the values of Ethereum, Dogecoin, and even Trump's own meme coin, which has dropped dramatically since its launch. The president's shifting stance on tariffs, including a recent pause on those against Mexican goods, demonstrates the unpredictable nature of policymaking and its direct impact on market sentiment. For many in the cryptocurrency space, the Trump administration represents a beacon of hope after what they perceived as a challenging regulatory climate under the previous administration. With promises of clearer guidelines and a more open-minded approach towards digital assets, advocates believe that the U.S. can reclaim its position as a leader in the global crypto market. Annalise Osborne, Chief Business Officer of Cadena, expressed this optimism, stating, "Crypto went from being the red-headed stepchild of finance to a cornerstone of American innovation." As the crypto community navigates this uncertain terrain, the upcoming months will be critical in shaping the future of digital currencies in the U.S. The newly formed Crypto Advisory Council is expected to address fundamental questions about how cryptocurrencies will be classified and regulated, impacting everything from investment strategies to the broader economic landscape. With the stakes this high, the developments in Washington will undoubtedly influence not only the crypto markets but also the global financial system as a whole. In conclusion, as Bitcoin and other digital currencies prepare for a potential shift in their regulatory environment, the interplay between political decisions and market reactions will remain a focal point for investors and industry leaders alike. The coming months will reveal whether the anticipated regulatory clarity can stabilize the market and foster growth, or if the volatility will continue to reign as the crypto community seeks to navigate this transformative period. In the fast-evolving landscape of cryptocurrency, recent developments have sparked significant attention and speculation regarding Bitcoin and other digital assets. As institutional interest swells, particularly from sovereign wealth funds, the market is bracing for potential seismic shifts in pricing and investment strategies. This dynamic backdrop is underscored by two noteworthy events: Neptune Digital Assets' substantial investments in Bitcoin and the political maneuvering surrounding a proposed U.S. strategic Bitcoin reserve. Neptune Digital Assets, a prominent player in the blockchain sector, has recently expanded its cryptocurrency portfolio by acquiring 20 Bitcoin at an average price of $99.833 per coin, amounting to a total investment of approximately $2 million. This acquisition made between January 26 and February 3, 2025 brings Neptune's total Bitcoin holdings to 376 BTC, reaffirming its commitment to Bitcoin as a cornerstone asset. In addition to Bitcoin, the company has diversified its portfolio by purchasing 1 million Dogecoin tokens at 37 cents each. Cale Moody, Neptune's CEO, emphasized the strategic nature of these purchases, stating, "With a strong focus on BTC, these initial acquisitions show Neptune's commitment to its growth strategy while meticulously managing leverage risk and debt levels." This confidence in Bitcoin comes amidst growing institutional interest, notably from sovereign wealth funds that are increasingly betting on cryptocurrencies as viable investment options. Reports indicate that various funds are evaluating their exposure to Bitcoin and other digital assets, signaling a potential shift in the investment landscape. However, enthusiasm is tempered by caution, especially given the recent high acquisition costs associated with Bitcoin. In contrast to the bullish sentiment in certain quarters, the political landscape surrounding Bitcoin in the US has taken a decidedly different turn. Following a surprise executive order from President Donald Trump, hopes for a U.S. strategic Bitcoin reserve have dimmed significantly. The order, which made no mention of Bitcoin or digital assets, instead focused on exploring non-Bitcoin investments for a new sovereign wealth fund. This shift has left many in the crypto community disillusioned, particularly after earlier expectations were raised during a speech by Trump at a Bitcoin conference last summer. The response from the market has been telling. Betting odds on platforms like Polymarket have plummeted, with only 18% of participants believing that the U.S. government will hold any Bitcoin in its reserves by late April 2025. This is a stark decline from the 48% odds just weeks prior. The lack of commitment from political leaders to incorporate Bitcoin into national asset strategies has compounded concerns about the asset's future in institutional portfolios. The implications of these developments are profound. Neptune's aggressive buying strategy highlights a growing acceptance of Bitcoin as a legitimate asset class among institutional investors. However, the cooling interest from U.S. political figures introduces uncertainty that could affect market dynamics. Investors are left to ponder whether the institutional momentum will continue or wane in light of the political landscape. As we look ahead, the cryptocurrency market remains poised for potential upheaval. The actions of sovereign wealth funds and the U.S. government's stance on Bitcoin will play a critical role in shaping the future of digital assets. With Neptune Digital Assets setting a bullish example and the political scene providing a contrasting narrative, the coming months will be crucial for Bitcoin's trajectory in both market value and regulatory acceptance. Investors and enthusiasts alike will be watching closely as these narratives unfold, each holding significant implications for the broader cryptocurrency ecosystem. In an unexpected turn of events, the cryptocurrency landscape has been significantly affected by the recent launch and subsequent volatility of the $Trump meme coin. After generating between $86 million and $100 million in trading fees within just weeks of its debut, the coin has seen its value plummet, revealing the inherent risks associated with meme-based cryptocurrencies. Launched by former President Donald Trump, the Trump coin initially captured attention with a market cap peaking at $14.5 billion on January 19, 2025, a day before Trump's inauguration. However, just days later, the coin's value has reportedly declined by two-thirds, dropping to around $19, marking a staggering 75% fall from its all-time high. This sharp decline came following Trump's announcement of new tariffs on imports from Canada, Mexico, and China, which triggered a sell-off across the broader cryptocurrency market. The fallout from Trump's tariff threats reverberated beyond just the Trump coin. Bitcoin, the leading cryptocurrency, also saw its price dip from approximately $105,000 to about $92,000 before recovering slightly. Other cryptocurrencies, including Ethereum and Dogecoin, experienced significant drops as well, highlighting the fragility of market sentiment in response to political and economic developments. Amidst this turmoil, It was reported that at least 50 investors made profits exceeding $10 million each from the dollar Trump coin. Conversely, an estimated 200,000 wallets faced losses, illustrating the uneven nature of the cryptocurrency market where fortunes can shift rapidly. Trump's son Eric Trump expressed pride in the achievements of the Trump Organization within the crypto realm, asserting, "We are just getting started," though it remains unclear whether any of the trading fees benefited Trump directly given his pledge to place his assets in a trust managed by his children. The dollar Trump coin, much like other meme coins, lacks substantial practical utility and was primarily designed to serve as a symbol of support for Trump. In promoting the coin, Trump encouraged his followers to have fun, while emphasizing that the tokens were not intended as investment opportunities. This narrative reflects a broader trend in the cryptocurrency space, where many tokens gain popularity based on social media buzz and celebrity endorsements rather than intrinsic value. In a bid to bolster the use of the dollar Trump token, products branded with Trump's name, including watches, sneakers, and fragrances, began accepting the coin as payment. This move aims to encourage crypto users to view such coins as legitimate payment methods, notwithstanding the volatility that characterizes them. As the cryptocurrency market braces for further fluctuations, the future of the dollar Trump meme coin remains uncertain. Analysts are closely monitoring how upcoming political decisions and market dynamics will influence cryptocurrency valuations. With Trump's administration poised to make waves in both the crypto and traditional financial sectors, stakeholders are left to ponder whether the dollar Trump coin can recover or if it will fade into the annals of digital asset history. The developments in this arena will likely serve as a litmus test for the broader acceptance of cryptocurrencies and their role in the financial ecosystem moving forward. In a significant development for the cryptocurrency ecosystem, Ethereum has raised its gas limits for the first time since 2021, marking a pivotal moment in its ongoing evolution. This adjustment was made possible through the consensus of over half of Ethereum's validators, allowing the gas limit to increase to nearly 32 million units, with a maximum expected capacity of 36 million units. This change is not only a technical enhancement but also a strategic move to bolster Ethereum's appeal in a competitive market increasingly dominated by alternative blockchains. The gas limit determines the maximum amount of computational work that can be performed in a single block on the Ethereum network. Prior to this adjustment, the last significant increase was in late 2021 when the limit rose from 15 million to 30 million gas units. The latest increase is particularly noteworthy as it comes in the wake of Ethereum's transition to a proof-of-stake model, often referred to as the merge. As the network continues to mature, enhancements like this are essential for increasing transaction throughput and supporting more complex decentralized applications. Raising the gas limit can have a substantial impact on network performance. It allows for the processing of more transactions per block, thereby reducing congestion during peak usage times. This is crucial as high congestion can lead to increased transaction costs, driving users toward cheaper alternatives like Solana. Higher gas limits may also enhance the utility of the Ethereum network, potentially rekindling investor interest in Ether ETH, which has recently seen its value decline relative to Bitcoin BTC. In January, the ETH/BTC ratio fell to its lowest since March 2021, prompting discussions about Ethereum's long-term value proposition amidst a bullish Bitcoin market. In addition to the gas limit increase, the Ethereum ecosystem is anticipating the upcoming Pectra upgrade, which is poised to double the capacity of Layer 2 networks by increasing the blob target from 3 to 6. This enhancement will allow Layer 2 solutions which operate on top of the Ethereum blockchain to store more data efficiently, further expanding the capabilities of decentralized finance DeFi applications. The timing of these enhancements is especially critical as market dynamics shift. Just as Ethereum was making headlines, Bitcoin's price surged past the $100,000 mark, fueled by recent geopolitical developments and a shift in U.S. monetary policy. President Donald Trump's recent executive order aimed at establishing a U.S. sovereign wealth fund raised speculation about potential government involvement in cryptocurrency markets, further energizing investor sentiment. Trump's remarks about creating wealth for Americans through such a fund signal a growing acceptance of crypto assets within mainstream financial frameworks. Amidst this backdrop, unusual trading activity has also caught the attention of analysts. A dormant Ethereum whale who had not moved their assets since 2019 recently transferred around $228.6 million in ETH to the crypto exchange Bitfinex just prior to a significant market downturn, raising eyebrows among market watchers. This transaction, along with substantial purchases by entities like Seven Siblings, indicates a mixed sentiment within the market, where some investors are seizing opportunities amidst volatility. As Ethereum continues to adapt and innovate, the implications of these changes are profound. The adjustments to gas limits and upcoming upgrades will likely enhance its position against competitors, but they also come during a period of heightened scrutiny and interest in cryptocurrencies. The evolving landscape suggests that both Ethereum and Bitcoin could play pivotal roles in shaping the future of digital finance, making it essential for stakeholders to remain vigilant and responsive to market trends and technological advancements. Looking ahead, the developments within Ethereum could attract renewed interest from institutional investors and further solidify its role as a leader in the blockchain space. In the ever-evolving landscape of cryptocurrency, few assets have garnered as much attention recently as Solana SOL and its burgeoning ecosystem. The Solana blockchain has become a focal point for investors, with its stablecoin market cap surging to unprecedented heights, driven by increased trading activity and notable political endorsements. This surge is juxtaposed against the backdrop of ongoing volatility in the broader crypto market, leading analysts to speculate about the future trajectory of SOL, particularly in relation to the popular meme coin Dogecoin Doge. As of early February 2025, Solana's stablecoin market cap has doubled from approximately $5.1 billion to an impressive $11.4 billion. This remarkable growth has been attributed primarily to a spike in memecoin trading and the issuance of USD Coin USDC, which constitutes nearly 80% of all stablecoins on the Solana network. Circle, the issuer of USDC, has ramped up minting activities, adding $250 million just days ago, which reflects a growing trend of stablecoin adoption on Solana. Notably, the launch of politically themed tokens, including one associated with former President Donald Trump, has further fueled this growth, attracting speculative traders to the platform. Despite these positive developments, Solana has faced significant price corrections, with its value dropping roughly 33% from its all-time high of $293 reached just weeks prior. Analysts are closely monitoring the price action, with some warning that SOL could plunge to $138 if it fails to maintain support above $191. Current trading levels indicate SOL around $196, following a notable 7% decline in a 24-hour period, exacerbated by a wave of forced liquidations impacting long traders. In contrast, Dogecoin continues to hold its position as the largest meme coin in the cryptocurrency space, while it has seen only marginal price changes lately. Potential catalysts such as the proposed inclusion of Doge in a meme coin exchange-traded fund ETF could introduce new liquidity and investor interest. However, critics argue that Dogecoin lacks intrinsic utility and is heavily reliant on speculative trading for price fluctuations. This raises questions about its long-term viability compared to Solana, which boasts a robust infrastructure supporting diverse applications, including decentralized finance, DeFi, and non-fungible tokens (NFTs). Investment analysts are increasingly advocating for Solana as a more stable and promising investment compared to Dogecoin. A recent analysis by The Motley Fool highlighted that for investors looking to allocate significant amounts of capital, such as $5,000, Solana presents a stronger case as a reliable asset, given its expanding ecosystem and positive regulatory outlook. The recommendation is to prioritize a larger investment in Solana while maintaining a speculative interest in Dogecoin only after securing more stable financial foundations. As the cryptocurrency market continues to navigate fluctuating sentiments, the developments surrounding Solana's stablecoin growth and the price pressures it faces will be crucial indicators for investors. The potential for regulatory advancements and technological innovations within the Solana ecosystem may provide the necessary support for a price rebound, while the ability of Dogecoin to attract sustainable interest remains uncertain. Looking ahead, the interplay between these two coins will be worth monitoring, particularly as new catalysts emerge and market dynamics shift. Investors will need to keep a close eye on price levels and trading volumes as they assess their strategies in this volatile yet exciting market.